The day that I closed on my house, I was literally sick to my stomach by how much money we had saved, and then it was just literally all gone besides what we had in our emergency fund. I mean, it was tens of thousands of dollars. What's going on, guys? I hope you guys are having a great day. If you're new to this channel, I actually talk about ways for you to get paid and to save, and I would love for you to be a part of this journey with me. So if you clicked on this video, then that probably means you're either interested in purchasing your first home, or you're going through the process or about to start, or something along those lines. You may be tired of renting and you're just looking to find a way to get out of that cycle. So I want to talk about some things you need to prepare for before you actually go through the process of purchasing your first home. Let's get into it now. What you need to do firstly is decide on a budget. How much are you willing to spend on this new home, and how much can you afford? There are a lot of calculators that you could actually just Google. You can go and Google, and I'll probably post something in here that says, how much house can I afford? Now, what this tool does is it actually puts in your income, it puts in your debt, so things like cars and credit cards and student loans, and it calculates all of that up along with your income. And if you have a spouse, you'll need to have that information for your spouse as well. But you'll put all of it, it'll calculate and combine all of that information, and it'll tell you about how much house you can actually afford. Now, the awesome thing about this tool is it'll show you exactly how much you can afford. So definitely pay attention to that tool. It's something I personally used, and it was fairly accurate when I actually did start going through that process. So that's important. Now, you're also able to go to your lender. They'll ask for your income. They'll ask how much debt you have, and you can kind of tell them. And they also have a tool, it's a calculator. It's pretty much the same thing that you're able to find online. They'll be able to tell you as well. Now, this is different from actually going through the pre-approval process, right? Because they'll actually pull your credit once you go through that process. But this is just kind of the first few steps. No one's pulled your credit. You haven't signed anything. You're just kind of looking and you're just trying to get information. This is what that is. So definitely look into that. Now, another thing you're able to do is you're able to determine how much money you can put down. This could be anywhere from 3.5% to 20% if you're trying to do an FHA loan or a conventional loan, or if you have even more money and you want to put down 50%, there are people that put down up to 50% for their home, or even pay it downright. They don't need a loan at all. But most people do either do the 3.5%, which is the FHA, or the 20%, which is conventional. But I want to tell you, if you put down less than 20% for your home, you will actually have to pay something called PMI, and this is private mortgage insurance that you will have to pay if you get an FHA loan and you do that 3.5%. I want to look at some numbers because I want to tell you just how much 3.5% to 20%, the difference in there. Let's say you find a home, it's $200,000. You don't want to pay PMI, you want to put down 20%. So 20% of the $200,000 is actually $40,000. That's just the down payment. That doesn't include things like closing costs. That doesn't include any furniture. None of that is included with anything that you need. Reserves that maybe the bank may ask you for. That doesn't include any of that. That is strictly your down payment. So a lot of people don't have 40 grand, or they just don't have the means to even save that much money. It's going to take a long time for them to save that. So they go ahead and go with an FHA loan. If you did an FHA loan, same scenario, $200,000, except for this time, you're only putting 3.5% down. So you're actually looking at about $7,000, which sounds a lot better than the 40 grand that I was just talking about. So definitely look into deciding which loan you need or you want to go with, and that will tell you which route you need to take. Now, with an FHA loan, because it is government backed, there's a lot more criteria that they have for the home. So look into that before you just decide, oh, I'm just gonna put down 7 grand. I can do that. I can save that in a year. Definitely look at all the pros and cons of both before you decide. And once you've decided, okay, I'm doing the FHA loan, I'm putting the 7 grand down, I've got this. good for you, but you need to figure out how long is it going to take you to save that money. And you have to really be honest with yourself. Is it going to take you a year? Is it going to take you 5 years? I feel like the standard amount to actually saving for a down payment is about 18 months. That's usually what most people say. Some people a year, some people 2 years. But that gives you enough time to save for your down payment, pay off any debt. That's things like credit cards, student loans, anybody that you owe, you know, kind of digging deep into your credit, making sure your credit's okay. I do have a video on how I actually improved my credit score, so definitely check that out. You'll really just want to kind of aggressively save, right? And 18 months is kind of that rule of thumb that says, yes, I can save, I can aggressively save with this amount. So definitely be aggressively saving. Now, I touched on this a little bit, but that's paying down your student loans, paying down your debt, paying down any credit cards, especially credit cards, making sure your credit is okay, making sure your car note's paid down. If you could pay your car note off, I suggest you pay it off, because the lower your debt to income ratio, the more house you'll be able to get approved for, especially if your income's not very high and you've got a lot of debt. If you pay some of that debt down, you'll actually get approved for more home. Now, I would still suggest that you live within your means. It gives you an opportunity to get more home, maybe even move to a little bit of a nicer neighborhood if that's something you want. And it just gives you more options. So definitely look into that. Now, a little secret, and this is something I didn't know, if you're about 10 months or less from paying a debt off, so I'll use your car note. Let's say it's January, your car note is supposed to be paid off in April. That's in what, 3, 4, 5 months down the line. What happens is, if you want to go ahead and start applying for the home buying process, a lot of times your lender, and this changes from lender to lender, but because it's fewer than 10 months, they will actually not count that and not include that debt in your debt to income ratio. So that is a little cheat secret that I found out with my car note when we were in the process of going through the home loan process. Now, another thing that you'll need to do is control your spending. This home buying process is so expensive. A lot of people say, oh, your wedding day is so expensive, you're going to spend all this money. And then you get to getting a house if you do it in that order. And let me tell you, the house takes the cake. The day that I closed on my house, I was literally sick to my stomach by how much money we had saved. And then it was just literally all gone, besides what we had in our emergency fund. I mean, it was tens of thousands of dollars. So you need to be aggressively saving to make sure that you have enough money to really just live comfortably. You don't want to buy a house and then be like, oh my gosh, I have no money for furniture. You want to save for furniture too. You want to save for, you want to still have an emergency fund too, right? Because you're aggressively saving for this down payment. Now, that might mean you need to take a step back, not go on that vacation. You can't do Miami this year. You might need to just forego that, because that $700 or $800 or $900 that you're spending on vacation could go towards your home. It could go towards maybe a piece of furniture, maybe even a bed set. Something simple, but it's something that will help you. Every penny, trust me, is gonna count. I've been there. I was just there. You'll want that. You may want to do an upgrade to your house, but if you're going on vacation, or you're buying new clothes, or you're constantly going out to eat, you're constantly going to happy hour, those $50 or $100, listen, that starts to add up. No, I'm not saying deprive yourself off of everything. You still want to have a good time. You still want to enjoy life, but maybe doing it a little bit less. So think about that as well. Now, another thing you'll need to do is revisit your living situation. You may want to see about downgrading. A lot of times we are in a 3-bedroom townhouse, or we're in something a little bigger just so we can be more comfortable. But if you're able to downsize to save on rent, right, because we're trying to aggressively save for our first home, you're able to really save some money and put that towards something else. It may be downsizing from a 2-bedroom apartment to a 1-bedroom. If you can do that reasonably, it may be even moving to a smaller apartment just so you can save $500 on rent, $400 on rent. It may not sound like a lot, but if you can do that, you will be in a better place and you'll have more money to save for your home. Again, you've got to kind of think about this. This is just a temporary thing. This is not forever. Yes, I know it's small. It may not be an area that you like, but it's kind of your decision. You want to make sure that you're kind of looking at this as a temporary situation for the future, right? A home is forever. You may not live at that house forever, but it's a home. It's forever. So think about that when you are thinking about where you're living. If you're still living check to check, you're not even gonna have enough money to save. So you've got to do something with your living situation. It may even be living with friends. Reach out to your parents, reach out to your aunts, your uncles, your friends, and just seeing if, hey, can I rent a room? I'm gonna give up my apartment. I'm saving for a home. If you explain to them, and this is your family and friends, most of the time they'll be there to support your decision. They understand how hard it is. They've been through that process, especially if they're homeowners before. So they're more than willing to help you out. They may not have room for you or may not let you live with them and crash, but they might still give you some advice or just give you something to help you along the way. So they definitely understand that. So definitely reach out to your family and friends, see if they're able to support you. Now, if you are new to this channel, I talk about ways for you to get paid and to save, and I would love for you to be a part of this journey. I hope that you enjoyed this video. You guys, I'm around. I will talk to you guys next time. Thanks, everybody.